Welcome to Breaking News to Trading Moves. We're going to focus on a specific corner of the market today that just posted some numbers that are, well, pretty hard to ignore. We're talking about Vertiv, ticker VRT.
Yeah, it really is the story of the moment. We just got their Q4 2025 earnings report, and if you're trying to follow where money is moving, this report is. It's the roadmap.
And for anyone who thinks this trade is just about, the chip makers, NVIDIA, AMD, all of them, this report from Vertiv is a real wake-up call. Turns out you can have all the chips you want, but if you don't have a place to plug them in and a way to keep them from melting, you don't really have a product.
Precisely. Vertiv is in the business of that critical digital infrastructure. They handle the power, the cooling on the IT infrastructure that makes a data center actually run.
Okay.
And what we're seeing in this report is that the bottleneck is moving. It's shifting away from just getting the GPU to, well, building the physical capacity to actually run it.
So let's get right into the data then. Vertiv released these Q4 2025 numbers. What exactly did we see?
It was a beat pretty much across the board. The headline number that traders usually look at first is the adjusted earnings per share, or EPS.
Right.
The expectation was $1.29. Vertiv came in at $1.36.
So a solid beat on the bottom line.
Correct. On a top line, revenue came in at approximately $2.9 billion. That was roughly in line, maybe a little ahead of what people were expecting.
But those aren't the numbers that really cause the stock to move, right?
No, those aren't the big ones. A beat is good, but this was something else.
And there was a specific metric in this report that really stood out.
It's the organic orders growth. This is the indicator of what future demand looks like.
Okay.
Year over year, Vertiv's organic orders were up 252%.
Wait, 252%? I had to double check that. That's not a typo.
Not a typo. It's a massive acceleration. It tells us that the hyperscalers, the big tech companies building these AI data centers, they're not slowing down at all.
They're speeding up.
In fact, they are speeding up their orders for all the physical gear.
Can you just clarify organic for us here? What does that mean in this context?
Sure. It just means growth from their own business, from selling their own products. It's not growth they bought by acquiring another company. So it's a pure signal of customer demand.
And that must lead right into the backlog. If orders are up that much, they've got to have a lot of work lined up.
Exactly. The backlog is up sharply to about $15 billion.
$15 billion.
And to put that in perspective, that gives them incredible visibility into their revenue for the next couple of years. And speaking of which, they also provided guidance for 2026.
And what are they projecting?
They're looking at an EPS of $5.97 to $6.07, and revenue between $13.25 billion and $13.75 billion.
And both of those ranges are way above what the street was looking for.
Well above. So you have better earnings now, a huge backlog, and guidance that says we're going to make even more money next year. It really explains why the shares reacted the way they did.
It just confirms the narrative then.
It does. This is the classic pick and shovel trade. During a gold rush, the people mining for gold, they might get rich or they might go bust, but the people selling the picks and shovels, they get paid either way.
And Vertiv sells the shovels.
In this case, Vertiv sells the shovels.
I like that analogy. It really simplifies it. But let's look at who else wins here. Because if Vertiv is selling that many more cooling and power systems, that has to imply a broader trend for the whole sector.
Exactly. This report is a read-through for the entire ecosystem. If Vertiv is seeing a 250% jump in orders, that demand has to flow to other companies.
Okay, so let's start with the most obvious problem, the heat. We know these AI chips run incredibly hot.
Heat is the biggest physical constraint right now. You put a bunch of these new chips in a rack, and the power density just skyrockets. Standard air conditioning it doesn't work anymore.
Why not? Is it just the sheer volume of heat?
It's the density. Air is not a very good conductor of heat. I mean, when you have a server generating 100 kilowatts of heat in the space of a refrigerator,
wow,
blowing air on it is like trying to put out a bonfire with a desk fan. You need liquid. Liquid is just so much better at moving heat away from the source.
So obviously Vertiv, VRT, is the main name here. But who are the other players in this cooling world?
You have to look at Johnson Controls, ticker JCI. They're a major player in building efficiency and these huge, large-scale cooling systems. When you build a massive facility, you need their kind of industrial-grade chillers.
Right. And I've seen Trane Technologies mentioned too, ticker TT.
Trane is another direct beneficiary. They specialize in thermal management. And as these data centers get denser, the engineering challenge of just moving heat away from the chips and out of the building gets a lot harder.
So companies like Trane and Johnson Controls, they have the tech to handle that scale.
They do. It's really something to think that air conditioning is now a critical part of the AI trade.
It absolutely is. I mean, without the advanced cooling, the chips just throttle, performance drops, and the whole investment is wasted. So thermal is bucket number one.
Yep.
Okay, let's move to bucket number two. You can't cool it if you can't power it.
Right. And this is where people really underestimate the complexity. You can't just plug an AI server rack into a standard outlet. The power density is so high, it forces upgrades across the entire electrical chain.
The whole thing.
The whole thing. We're talking about the grid connection, the switchgear, the circuit breakers, the power distribution units inside the rack itself.
You said switchgear. We hear that term a lot in these industrial reports. Can you just quickly break that down?
Yeah, sure. Switchgear is basically the combination of electrical switches, fuses, circuit breakers. It's what controls, protects, and isolates all the equipment. It's like the safety valve for the grid.
Got it.
If you put too much power through a system without the right switchgear, things melt.
Well,
Or worse.
and because these data centers are drawing so much more power, they need bigger and better switchgear.
Exactly. The winners here are the companies that make that stuff. Eaton is a prime example, ticker ETN.
Eaton's been on a run lately.
And for good reason. They make the power management solutions that are absolutely essential here. If Vertiv is selling the unit in the rack, Eaton is often selling the equipment that gets power from the utility to that rack safely.
And what about Hubble, HUBB?
Hubble is another one. They deal in all sorts of electrical and electronic products. Just think about the sheer amount of cabling, connectors, specialized gear required. As that rack density goes up, the quality of every single component has to go up.
Right, you can't use cheap parts when you're pushing that much amperage.
Not a chance.
So we have the cooling companies, the power companies, but someone has to actually build the building.
That's the third category of winners, construction and engineering. Remember that $15 billion backlog for Vertiv? Yeah. That equipment has to be installed somewhere. That spike in orders tells you that a huge volume of construction is coming online just to house all this new gear.
So who are the names to watch there?
Quanta Services is a big one, ticker PWR. They're specialized contractors for infrastructure. They do a lot of grid work, but they're also deep into the specialized infrastructure that powers these centers.
And EMCE Group, EME.
EMCE provides the mechanical and electrical construction services. They're the ones, the boots on the ground, who are actually installing the cooling loops, wiring up the switchgear, and making sure the facility works.
So if Vertiv is shipping the product, EMCR is often the one putting it in.
Very often.
Yeah.
What you're describing is basically a massive industrial build-out. It's not just code and software anymore. It's steel, it's copper, it's concrete.
That's the reality of it.
It's becoming an industrial story.
But, markets are rarely a win-win for everyone. If capital is flowing into these sectors, are there areas that might actually face some headwinds from this news?
Oh, there are. And it's a bit of a paradox. You might think, well, if data centers are booming, the landlords who own the data centers must be winning too.
That would be the logical assumption. Companies like Digital Realty, DLR, Equinix, EQIX, they own the buildings.
They do, and demand for their space is incredibly high. But here's the paradox. The cost to build new capacity is rising fast. The equipment, the stuff Vertiv sells, is getting more expensive, and because of that backlog, harder to get.
So their input costs are going up.
Input costs are rising, and the lead times are stretching out. If you're a landlord, you want to build a facility and lease it out as fast as you can. But if you have to wait longer for switchgear or pay a premium for cooling units,
your returns on that project get smaller.
Your returns can compress. So even though demand is there, the profitability of meeting that demand gets squeezed.
So it's a risk of what they call yield compression.
Correct. And on top of that, these companies are REITs, real estate investment trusts. They're sensitive to interest rates and capital costs. So they just face different risks than the equipment suppliers like Vertiv.
That's a really crucial distinction. Just because you're in the data center supply chain doesn't mean you have the same risk profile.
Not at all. The supplier has the pricing power right now.
So what about the broader market? We often talk about rotation. If traders are buying Vertiv and Eaton, what might they be selling?
There are two main areas that tend to act as, let's say, funding sources in this kind of trade. The first is what we call rate-sensitive long-duration assets.
Can you break that down for us?
Sure. Think about companies like American Tower, ticker AMT, or SBA Communications, SBAC.
The tower company.
The tower companies. They are infrastructure proxies, but they're very sensitive to valuations and interest rates. When a growth narrative like AI infrastructure takes over, the market often reprices these steady, almost bond-like companies downward to chase that growth.
So it's not that American Tower is doing anything wrong, it's just that the money is moving to where the faster growth is perceived to be.
Exactly. It can be a choppy period for them. And the second area is legacy tech.
The old guard.
Yeah, companies like HP Inc., ticker HPQ, or Hewlett-Packard Enterprise, HPE. Now, HPE does have AI servers, but broadly, the market views them as slower growth narratives compared to a pure play like Vertiv.
It's just the difference between buying a company growing at 5% and one growing orders at over 200%.
Right. It's rotation risk. Investors pull money out of traditional enterprise, hardware laptops, printers, standard servers to fund positions in the high-growth power and cooling trade.
Okay, so to bring this all together, we have this report from Vertiv, VRT. Confirms that the demand for AI infrastructure is actually accelerating.
And specifically the demand for the physical support systems.
Yeah.
The power and cooling.
So we have our winners, the thermal companies like Trane and Johnson Controls, the electrical companies like Eaton and Hubbell, and the builders like Quanta and EMCR. And then we have the areas to be cautious about. The landlords like Digital Realty facing cost pressures, and the legacy tech names that might just be used as a source of funds.
That's the landscape.
So if you're watching this market, what's the next signal? What should you be looking for?
You want to look for confirmation. Vertiv is one data point, a very strong one, mind you. But you want to see if this pattern holds up. So you watch for the next earnings reports from the other electrical gear and HVAC names.
You want to see if they're talking about the same kind of backlog growth.
Exactly. If Eaton or Hubbell comes out and says, our backlog is flat, then maybe this is just a Vertiv story. But if they also say, we can't make switchgear fast enough, then you know the trend is solid.
And what's the risk? What could stop this whole thing?
The trade depends entirely on the hyperscalers, the Googles, the Microsofts, the Amazons, continuing to spend billions on CapEx.
If they close the wallet, the trade stops.
If there is any sign of slowing capital expenditure, or if supply chain constraints get so bad that margins start getting hit, that's the risk factor. You need the spending to continue.
It's a delicate balance then, even with these huge growth numbers.
It always is.
You know, before we wrap up, there's one thought that just really stands out from all of this. We spent the last couple of years focusing on the chip, the silicon. That was the bottleneck. It feels like we're entering a new phase where the building itself is the bottleneck.
That really seems to be the theme for 2026. The bottleneck used to be microscopic lithography issue on a wafer. Now the bottleneck is macroscopic. It's a transformer on a utility pole. It's a chiller unit on a roof. It's the physical availability of power.
The bottleneck is literally getting bigger.
Literally.
Yeah.
And historically, the most profitable place to be in any supply chain is right at the bottleneck. If you own the thing that's scarce, you have pricing power. For a long time, that was NVIDIA.
And now?
Now it looks like it might be the companies that provide the power and the cooling.
It's a change in the landscape, from the nanometer to the megawatt.
And that's exactly why we watch these earnings so closely. They tell us where the scarcity is moving.
Well, we will certainly be keeping an eye on the rest of these industrial names as they report. It sounds like the boring stuff isn't so boring anymore.
Not when it's growing at 200%.
Absolutely not. We want to thank you for tuning in to this breakdown of the Vertiv earnings and the broader infrastructure trade. It's a complex market, but following the orders usually leads you to the reality of the situation.
It does.
Before we sign off, we do have to mention that everything we discuss today is for informational purposes only.
Please note that this is not financial advice or buy or sell recommendations. This is purely the opinion of the author.
Thanks for listening to Breaking News to Trading Moves. We'll catch you on the next one.